Hey traders, JB here and welcome to another exciting edition of our gold weekly analysis. This week was nothing short of a roller coaster ride for gold, with a range of prices from a weekly high of 1959 to a low of 1861. The market saw some key economic data releases including the Fed interest rate, jobless claims and non-farm payrolls, which came in double the market forecast. The market opened the week at 1927 and closed at 1865 with a high of 1959 and a low of 1861. Despite the strong uptrend in the previous weeks, the market saw a strong downtrend this week, characterized by a strong engulfing candle on the weekly time frame. This wiped out the gains made in the past 2 weeks. The relative strength index and stochastic RSI on the daily time frame show a bearish trend, with the 5-day exponential moving average below the 8-day exponential moving average. However, the price has taken support from the 50-day moving average, which is currently at 1861. For the coming week, the nearest resistance level for gold is 1900 while the support remains at 1860. The strong uptrend channel that the price was in since November has now been broken, with the price sitting just below the channel support, which has now flipped into channel resistance. To keep an eye on the coming week, we have the US trade balance, Fed Chair Powell's speech, weekly jobless claims, and Michigan consumer sentiment. Based on the current trend, my prediction for tomorrow is to enter short positions at all key resistance levels with a target of 1830 and 1800. The nearest resistance level for initial entry is 1880, which is the 200 moving average on the 4-hour time frame, and the channel resistance that was previously a support but now has flipped into a resistance after it was broken. Overall, the daily candle structure and candlestick pattern suggest a bearish trend with a strong downtrend visible on the daily chart pattern. The trendline pattern also confirms this bearish trend, and traders should exercise caution and keep a close eye on the key economic data releases this week, as they could have a significant impact on the gold market. That is it for this week's gold analysis, folks. I hope you find this information useful, and until next time, happy trading!